Hello student, welcome back to IBS. Today we are going to discuss about our master budget, which is very important in finance domain. With the help of a master budget, we will try to create 5 years of budget and we will see our future. Okay, so this is the main purpose of finance professional who has capability and capacity to allocate the resource for 5 year and give information to management and inside that how much our revenue will be after 5 year or 10 years. So let us jump to that topic and understand it. Okay. So first of all, we will discuss a few important points with regard to master budget. What master budget is? This is a collaborative goal for a budgeting process. Okay, also known as a comprehensive budget. Okay, comprehensive budget means detailed budget, but I would say only annual budget would be in very detailed, and the rest all budget will be based on assumption. We will see about this in later topic. Okay. So now the third point is time frame and often include multiple years, 5 year to 10 years. So they are trying to say a master budget maybe we can create for 5 year or maybe 10 year. Okay, but 5 year is the most effective way to create a master budget. Okay, but creating 5 year to 10 year budget is not much complicated. If you have created budget for 5 year, or I mean to say if you have prepared your financial model for 5 years, so then 10 year is not very difficult. You can easily create 10 year budget too. Now we will talk about summary set of budgeted financial statements such as balance sheet, income statement and cash flow. So while creating financial model for 5 to 10 years, we will create in the summary set of balance sheet, income statement and cash flow. Like these are the statement which will not be in depth, only the operation budget and revenue budget and income statement and cash flow for annual period of budget will be in detail, and the income statement balance sheet will only have the amount of those detailed budget. For example, revenue has 100 million. Okay, and you have 5 company and every company have 20-30 million, like this consolidated 100 million. So every company will have detailed spreadsheet of their client list, their amount and their month when they are going to sell, etc. Okay, name of the client here and their amount in and month, like this. So all this summary will club together and one amount will come into your income statement, right? P&L or income statement in revenue side for year one company, your subsidiary or company one, total amount will come here. Okay, X amount. For company two, X amount. Or if it is not company, if it is product or something, so whatever your company structure is, for those structure will come here, and then you will have the total revenue forecasted value here. Okay, so this is how that amount is called summary. So this is what they are trying to say: summary set of budgeted financial statements such as budgeted balance sheet, income statement and cash flow. So all these three financial statement will be in summary set, but inside there are so many annexure and so many tracker will be there which help you to finalize your summary. Okay, now jump to the another topic. So now we are going to think about what exactly the master budget is. Okay, and what are the budget who comes under this. So this is your main or master budget. Under this there are summary budget, all the summary budget of balance sheet, income statement and cash flow. Under summary budget you will have a lot of pro forma budget, pro forma income statement, okay, pro forma cash flow and pro forma balance sheet. So the question comes here is, why do we create pro forma income statement, cash flow or balance sheet? So normally pro forma income statement, cash flow and balance sheet are created to give the feedback, okay, or snapshot to your investor. So they will see in case scenario. This has been created for scenario planning. Okay, for scenario planning one, if we are growing by 10%, what would be their share value, or I would say earning per share. And if in case they are in the average growth, so what would be their EPS? And in case they are in the worst situation, we are assuming 2%, then what would be their EPS? So that amount will give them understanding that in case of worst situation, how much they are going to generate their revenue, and in case of good condition and market is growing good, then how much they are going to achieve. Okay, so this is their nothing but return on investment of 1 year. So this will give them an idea about their future, so that in case future anything wrong happen, so they are ready for this worst situation. So they will not come to you and ask you so many unnecessary question, or so you will they will not fire you or something by saying that you have not achieved this, what happened, they will be like thinking what happened, like something is wrong happened or something. If you have already prepared and told him that in case of bad situation this will be our case, okay, in case of good situation, in case of bad situation this will be our case, and in case of good situation we will be able to earn this much. Since they are businessmen, the CEO of the company or the investor, they know business has fluctuation, and already communicating him the industry in which we are working, the business we are doing, has volatility or not. So there, if there is volatility, there is a lot of chances of good opportunity, as well as there is a lot of chances of threat. So the risk, so taking risk will give good return, or if you're not taking risk you will achieve a marginal profit. So businessmen, if they don't want to take, they will do the FD, right? They want to take risk. That is why they are doing their business. So they are also prepared in their mind somewhere. But they have to talk to you that something wrong happened. They will obviously feel fear and they will ask. So that is why we are preparing this scenario planning, so that we will inform him before the situation or risk has occurred, so that they will also be prepared. So in case of war situation, we will be generating this much from this particular company. Okay, so these are the other thing you can read it out. Okay, you will understand the difference between performa and the master budget. Okay, purpose of performa financial statement, it is used for planning and decision making, which I have just now spoken. So I think I have already covered all of this thing. Okay, so we'll move into the next topic. I'm trying my best to give you more and more insight and more accurate and industry trending information, so that when you will go for interview, you will face the interviewer and you will able to give them and visualize them the correct picture, so that they will think you not only have skills, you have practical exposure. So they will immediately hire you. So okay, thank you for your time and trusting me, and let me help you out. So now we are going to discuss about development of master budget. Okay, so but before developing this master budget related topic to be discussed, I wanted to give you the scenario planning, how we do scenario planning in Excel. So let us jump to the Excel sheet and understand that first. Okay, so this is our information. Okay, we will be preparing our various different nature of manufacturing budget. Okay, so this is the exact information we have taken, and I have created this income statement. So this is our historical data. Based on historical data, we have predicted our revenue. Okay, and then we have predicted our cost of goods and gross profit, and what is our gross profit margin. These are the thing, and then operational expenses we have planned, and then we have calculated our fixed costs. These are our fixed costs. Okay, so like this is our income statement we have created. So now the point here is we want to calculate our scenario planning. Okay, in case we know that market is going great. Okay, so in those case we will consider it is upward situation. In case market is average, okay, so we'll consider this is average, and then the third point is our market is going down. So that will be our third scenario. So for three different income statement I have created. In case of up case, okay, yeah, I mean to say it is good situation. So our income statement, the same income statement data I have taken. Okay, from here I have just make it simple, so that it will not be complicated for you. So okay, so this is our last year revenue, and then we are planning to predict a 2025 revenue. So I have taken 10% increment. So same 10% increment will come in all the 5 year. Okay, now cost of goods, we have simply calculated 70% of total revenue. Then simply when we reduce cost of goods, we'll get our gross profit. After that, we have taken the all our operational expenses, and then we have taken our fixed cost. Okay, fixed cost will remain same to all the situation. Okay, for example, you can see this rent is 22,000. Okay, and 29. Let me copy this. Okay, we'll go to the second situation so that you will know. In the average situation, when our revenue is 5%, see our fixed cost is same. Okay, check our this cost. This is same. Okay, whatever the factory rent here is. Okay, factory rent is 29,282, the same amount we have here. Okay, so this is how we have to keep our fixed cost as it is in all the situation, because fixed is our committed cost which will not change. Here also 29,282. Okay, and this is 22,000 from initial cost. So this is what exactly we are taking, but this one will change based on the revenue. If we are reducing our revenue by 2%, suppose in case of war situation, our sell revenue will increase 2%. So similarly, our expense will also increase 2%. I have just taken 2%. Okay. This is the basic calculation and simple income statement I have created. And this one is average. We have taken revenue 5%, as well as we have taken all the variable costs as in 5%. You can see this. Any place you will see this. Okay. So this is 5%, and this is also 70% of total revenue. And this is our revenue as of 5%. And this is 70% of revenue. So now, since we have created our average income statement, in case of low, we have created our income statement. So net profit is, you can see, 1,33,000. I'm doing the paste special. Okay. So you can see this is the difference. Okay. And now we'll take this average case. This is our average case. Okay, average cash related net income we will compare with our, when everything is correct. Okay, so up case we will check. So you see that the difference is coming. Okay, so there is difference. It indicating that all three are prepared correctly. First net income is 1,47,000. We have seen that all the net income are different based on different revenue forecast. Okay, so now we will create a live case. Okay, in case the first assumption has been given, case 1, assumption 2 has been given, case 2, and assumption 3 has given case 3. Okay, so this is 3 different assumption. Now we have this formula. If we put 2, they will pick 5% revenue. You can see 889. Okay, assumption 2, 889. Okay, 1172, the revenue of 1172 revenue of this year, FY28. Now we will paste it here. Okay, so in case we change this to 3 or 2, for 2, and they have picked 1138 and 863. Let's check it. 1138, 683, assumption 3. So it is actually picking the correct amount. Okay, net income 133 and 179. Let's see this, 179 and 133. So this is calculating correctly. So now how you are going to calculate that, I'm going to show you here. First we will click on equal, and then we will select CHWS, choose formula. You will select, then you will take index. This is the index. Then you will give comma. The index is the indication in which case we are going to view as a live information. So if in case of worst situation we want to see the worst situation related net income, so we will select here 3. If we want to see the live of up situation, we will select 1. Okay, so now we have selected index. Now we will go and select particular number 1. So in this case, Before that, what I will do, I will make this freeze by giving him dollar in both the side. Now I will select index 1. Okay, then we'll give comma. Then I will go and select assumption 2. This is assumption 1. In assumption 2, I will select, okay, index 2. Then I will give comma. Then again I will go down from here, assumption 3. Okay. Now since we have taken all these three, we'll push enter. Okay. One more thing, will take revenue also. Okay. Now he is speaking percentage also. Okay. If you change this to 1, it will pick the up situation. If you change it to 3, it will pick the lowest situation. If you pick 2, it will select the middle situation. So now all I need to do is just copy this and paste it here simply. So they are calculating. Now you can either copy it or paste it for 5 or 3 year. Okay. So all this has come. So 1, 2, 3, 4 years. Okay. This is the total years. Okay. So now we can do formatting if you want, but now just don't keep this so much thing to make it. Just try to understand the concept here. Okay, now we'll change it to 1. You see they have picked out 10%. This formula has also picked up the 10%, and if you see the value, it will be same. Let take in and formula and check whether they have any wrong or something. It is coming correct. Okay. Also you can verify one this with this, this one with this one, it is same. Okay, if we change it to 2, let's see, it is changing, picking the average. If we select 3 index 3 is for lowest. This is again picking the correct information, as you can see. So this one is been created, the scenario planning has been created only to know this thing. We are anticipating our number of share is 20,000. Okay, so in case of first index, when everything is going good, then our earning per share will be 7.37. The same thing I have kept it here. So now if you see, if we change the index, then our net income will change. So based on net income, EPS is coming 692, and also average is also coming the same, this one and this one. Okay, and the amount, if you see, the amount will also be same for average. This one is average. Amount is 1,38,000, 1,85,000. Okay, let's see this. 1,85,000 and 1,38,000. This is correct. So now we will see for worst case. Worst case revenue has gone down further. Okay, and EPS went low further. So now the management will know for this year our situation went wrong, then our earning per share would be $7.37. In case of worst situation, in case of good situation, our earning per share will be this much, and in case of worst situation, our earning per share would be $6.67. So this is the main snapshot we will give to higher management or the investor. For that purpose, company create Forma invoices. So now we will jump to the topic and discuss this further. So now I think we have learned today about the master budget and why master budget is being created and how master budget are created, as well as scenario planning, what Forma balance sheet, Forma income statement, balance sheet and cash flow is, and the purpose of creating this. Okay, and we understand the reason of creating. Based on different scenario, we create different income statement, balance sheet, and cash flow, and their uses. So I have given you simple examples so that it will not be so much complex for you, but it will give you a whole idea and main intention behind this pro forma income statement. We'll see you into the next session. Thank you very much.